Hi, and welcome to Random Rogers Big Picture for the week of October 12th. Want to go over, obviously, the market a little bit. Quite an interesting couple of weeks there. Just a quick note, we are fostering a new little dog who looks a lot like Trixie, little tiny blonde dog. I'm calling him Uptick, and Joellen is calling him Pee-wee. But a little bit of disturbance maybe, so hopefully we can get through this without too much distraction. Okay, so let's talk a little bit about the stock market. Crazy action, a lot of down, some recovery, then a lot of down again, then some recovery, some meandering, down a little. Pretty crazy on top of what has been crazy couple of weeks. The notion that I have been spelling out for ages about normal bear market for now certainly appears to be wrong. We have been working along in normal bear market fashion, and then in the last 2 weeks we've lost 25 or 6%, something like that, which is pretty crazy action. Does not happen, that is a crash. I mean, it's, there's a couple of other crashes, that have occurred in history. This one, the details were different, but it is just another crash. The day on Friday, I'm not sure that it really signifies too much in the way of health. I'd like to hope that it will mean something healthy, but that sort of volatility, represented at the open a willingness to flee from stocks, to absolutely panic out of stocks, and then the moves up also belied a type of panic. So panic is still there in the market. We'll see what the G7 does over the course of the weekend. It'll either be constructive or it won't, and it's reasonable to be skeptical. The S&P 500 was down about 1.2%, which is a little on Friday, which is a little deceiving because financials, as measured by IYF, were up 6.3%, which is a big chunk of why the S&P only down 1.2. Tech had a pretty good day. A lot of the other sectors that were down in the 2s and 3% area. Energy, measured by XLE, was down just over 4%. So if you're defensively postured, but you had a worse day than the market anyway, which I haven't checked yet, but I imagine that I did, I wouldn't worry too much about it. Okay, so strange day in the market. Let's move on to the next thing, which ties in with trying to assess emotion and the like. I had a good comment that I answered to on the blog, but I wanted to share in the video. I don't know if anybody actually reads comments or not. But basically, someone asked me if this bear market is worse than the 2000 to 2003 bear market, and I gave on the one hand, on the other hand type of answer. On the one hand, this one is better than the bear market than the other bear market because the other one was a 50% drop spread out over like 2.5 years. So it was just a kind of a slow, continuous bleeding down. Which is, wears you out in one kind of way. It was just 2 years of bad news. This one, so far, meandering along at a normal bear market, and then it just fell off a cliff. It was 25% in a couple of weeks. That is a crash. A little different than the other crashes, but it is a crash, to be clear. I've said that quite a few times, obviously. But where we are right now, down what I guess is 25 or 6%, I don't think at this point, and the reason why it's worse is because of that velocity, we are all stunned. It's like, market participants have been hit in the face by a 2x4. They're just absolutely stunned. So in that light, it doesn't really matter what the magnitude of the drop is. If it were, let's say it's exactly 25, well, it wouldn't matter if it were 23 or 28. The market is stunned right now. And it has created a huge sense of panic. Maybe Friday shows ending of the panic, I don't know. Maybe it shows an end of the fear, I don't know. But it has created a crazy fear, on all sorts of fronts. And so, weighing the two out, I don't know. I mean, this is one way I look at it. This has been a fast decline. It is reasonable to expect fast declines to bounce back. That doesn't necessarily mean it's the bounce back, but at SPX 900 or 899, I guess is where we are, to think that we very quickly go back pretty close to 1100. That's far from a stretch. That has happened plenty of times. We've got mayhem and chaos here. The 2001 September 11th, we got close to a 20% rally. Off of the low in 1998, we got a 20% rally. There are a couple of other, in the last bear market, 20% rallies that I don't even remember. It's been a long week. So that's kind of, very, very possible. And I have no idea that would be the one, but plenty of historical precedent. I personally would probably use that as a chance to lighten up a little bit. Also, one thing that's floating out there is at some point I am going to take a tax loss or two, and when I do, I imagine I would just sell across the board. But, so there is that visibility out there. We'll just see what happens. One last point I want to stress on, and hopefully this comes through in the writing, and hopefully it comes through in the videos, is my lack of emotion, regardless of what, and I've said all of this stuff before, there's nothing new here. But since you're watching this, you on some level, you must have some interest in what it is I have to say on these matters. There is no emotion that's going to fix the problem. There's nothing you can do that's going to make the market go up or stop it from going down, or, flip side of the coin, cause it to go down further. Totally beyond our control. Repeated for emphasis. So there is no point in having emotion. This is a decline. The details appear to be different. It will bottom out wherever it bottoms out, whether it's 899 on a closing basis or some other number. It'll bottom where it bottoms, and then it'll work its way higher. It'll either rocket higher, it'll meander along a bottom for a while, and then go higher slowly. It'll do something in between those two extremes. No idea, but it'll happen. Also, have no idea how long it will take. Now, no emotion is one thing. Plenty of uncertainty, though. All of those things. I don't know how a recovery starts or what it looks like or how long it takes. I just know it'll happen. That's how markets work. I hope that it is quick enough and powerful enough to, allay some of the concerns that people have. No offense, but especially clients, to the extent we've got clients that are worried, and reasonably speaking, of course they are. But totally beyond our control. It'll happen on its own timetable, and that will be that. Looking out to the future, something along the lines of what Roubini is saying. Yeah, and I've been saying this for ages, that at some point we need to look to have more foreign exposure. I was not predicting whatever it is that's going on now, but just more like I expected growth in the stock market and GDP here to be less than what we've become accustomed to. And so you need to be willing to explore other destinations, ones that are having more cyclical issues. A place like Chile, best as I can tell, and I try to study the market for there fairly closely and such. That's more of a cyclical issue, not a secular or worse type of issue that we might be confronting here in the U.S. This is an opportunity to seek out where it is you're going to find the returns that your financial plan calls for. This tone that I try and set forth, that's always going to be my tone. An awful lot of repeat here on that score. I wish I could say the same about my emotions with regard to Red Sox playoff baseball. That is very difficult. I just sit there like this, just kind of staring at the screen, just waiting for it to end sometimes, especially that middle relief. Woo, woo. Anywho, that's it. Have a relaxing weekend. Maybe go out and get a dog. Little dogs, all dogs, but the little dogs especially relieve stress. Maybe that has helped me through all of this. Maybe it'll help you. Have a good weekend.